if you're actively pursuing a deal and trying to make things happen, you should be out talking to people and networking and to make it happen. And the more you talk about it, the more that people will want to invest with you, and inevitably you'll start finding the money. But to say that it's just going to come almost as if you don't have to put any effort into it, that's bad advice.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Eric Neely is a real estate professional focused on developing private placements in apartment complexes so the everyday professional has an opportunity to invest in high-yield cash-flowing real estate. And he's also host of the Wealthy Trucker podcast. And if I'm not mistaken, Eric, you're calling me from the road today on Interstate, I think it's I-70 there in Kansas. Welcome to the show.
Well, thank you, Sam. It's a pleasure to be here. And yep, that's correct. I'm sitting on the side of the highway right now in my office behind the windshield.
Man, I'll have to say this. I give you props for having fairly good audio for a guy sitting in a semi truck. That's pretty good. I've had people sitting in their own home offices with poor audio. So that sounds good. I appreciate that.
Nope, no problem. Well, I have a lot of experience of listening to podcasts, and I also, like you said, I run my own podcast. So audio is something that I had a little bit of time to research because I knew it was pretty important. So the headset I bought was specifically so that I could do what we're doing right now.
Man, that's fantastic. I love it. There's 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Sure. Well, I started honestly, probably, driving a truck. I've been a trucker for 20 years almost, and really didn't take investing seriously at all. Honestly, I had a 401k and I always put money in it, but I just ignored it, pretended like it wasn't even there. That way I wouldn't never be tempted. So I didn't even know how well it performed. So that's where I was. And as I was driving trucks, spending all this time out on the highway, I started, thinking about how am I going to get out of trucking eventually? I can't do this forever. It's beating up my body. So, and I don't know what I need to do to prepare for retirement. So, ended up starting to educate myself through podcasts and ran across the infamous Bigger Pockets podcast. And thought, well, maybe I could start flipping houses, something like that. And just ultimately, the more I learned about it, the more I realized, man, I'm already working 60, 70 hours a week out here on the road. There's no way I can flip houses and do it consistently. And, I also have a close friend of mine who's in the finance world. So I started talking to him about this multifamily syndication thing that I'd heard about. I said, what do you think about that? And he said, man, I've got clients that I do their taxes, and this is exactly what, I already understand this. I'm like, well, what do you think about us, getting into a partnership and doing something like this? And he goes, let's do it. Let's make it happen. So I said, well, I'm going to spend the next couple of years learning how to do it while I'm out here on the road, use the highway education tools. So podcasts, audiobooks, and started networking. We created our own meetup a few years ago that I host in our local community in Wichita, Kansas. And then I started the podcast, The Wealthy Trucker, and the sky's the limit. And wherever the Lord will take us is where we'll go. And so now today I own I joint ventured into a apartment complex a couple of years ago. I've invested passively into larger apartment complexes, and we are in the process of closing a larger syndication. So, if you take the education you get and apply it, you can go anywhere. And I still work full time driving a truck, so still sitting in a truck right now.
Man, that's a lot of moving pieces, and you've done what I think a lot of people are unwilling, to put themselves out there and do, right? I mean, you started a podcast, you started a meetup, those are obviously thought leadership platforms, but also just kind of built a brand and a following around what it is that you're doing. And I think that's really, really cool, because that takes a little bit of courage. Did you do that at the same time that you already had deals going, or was that something you did first? What would you recommend to somebody in your shoes?
You've got to tell people what you're doing, and it's challenging to do it when you haven't done a deal yet, and that's where, I mean, I guess if I look back on what I did and how I can maybe do it different, the one thing I regret is not starting the podcast as soon as I did. I mean, I get more reach with the podcast. I talk to more people because of it, and it gets your name out there so that people know what you're doing, and that's ultimately what it boils down to. People have to know what you're doing. This is very much a people business. If people don't know what you're doing, they're not going to invest with you. If they don't know who you are, they don't know, like, and trust you. That's the common thing you hear. If they don't know, like, and trust you, why would they invest with you? I don't know how many times I've heard people say, well, if you have a deal, the money will come. I think that's not really true, because if people don't know who you are, if they don't trust you, why would they invest with you? I don't care how good your deal is. So that's kind of how it is. That's how my mindset works anyway. If I could do it different, I would have started the podcast sooner. We did do the meetup pretty early, but in Wichita, Kansas anyway, it's a smaller community. I don't know how many people we have there, around less than 1 million. And so the reach there was not as great as it might be in a bigger metropolitan area. So my meetup ranges anywhere from 10 to 20 people on average per month. It's a small amount of people. It still gets me there, but the more people you can reach, the more people you're talking to, the better off you're going to be.
Right. Tell me about your deals. You said, can you rewind that a little bit for me? I know you said what you guys have bought so far. Can you give us the summary on what you guys own currently?
Sure. We bought our first one, like I said, was a JV deal. It was really between me, my business partner I was telling you about that does the finance, and then one other primary capital partner. He put most of the money into the deal. Between the three of us, we bought that. We self-manage it, and really that's because that third partner that I'm talking about, he is retired and he wanted something to do, and he's been in business most of his life. So anyway, long story short, it was an amazing learning curve buying that property and self-managing it, because you really learn what you're going to ultimately end up hiring a third party to do.
Right.
And that in itself was worth quite a bit. So, learning the importance of screening tenants and learning the importance of being personable and talking to people and taking care of them. I mean, the fact that we self-managed that, it really ironed into my head how you may be creating an investment vehicle for somebody. You may be trying to make money yourself, but you're also impacting people's lives that live in your property. And if you don't think about that, I think you're not really seeing the full picture. And if you're just being greedy and wanting to make money, then, I mean, you can do it, but that's not what this is all about in my mind. So that self-managing, it really drove that home for me that, hey, this is somebody's home. They're living in my property. I need to treat it like that and take care of them correctly. And so if I'm going to hire a third party now, I've got a whole new set of criteria and standards that I'm going to hold this third party property management company to. And if they're not taking care of the people the way I want them to take care of the people, then I have no business dealing with them any longer. So
right.
It was very valuable.
Absolutely valuable, and that's an education, I think, like you said, that everybody probably needs, even if you learn it on a smaller property, just to get your head wrapped around what you're going to expect from your property management company on a larger scale. Tell me about the biggest deal you guys have done in the syndication space, and tell me the kind of the things that you learned in raising capital for that and bringing investors on board. And then I'm gonna keep throwing questions at you all at once, and then maybe tell me about the conversation you have with investors as it pertains. I'm sure you get asked, "Hey, wait, you're still a full-time truck driver. How are you going to take care of this asset?"
Right. Well, it was a 66 unit in our local market, Wichita. The reason I stuck to Wichita was because I needed something in my backyard that I could still have eyes on regularly because I work full time. So that's been one of the discussions with people. So, well, listen, I'm going to be there on a very regular basis. I'm on a my communication with my property management company is very regular, and ultimately they're the ones managing the asset anyway. So, and then when it comes down to doing distributions and taking care of the finances, well, my business partner has his own accounting company, so that all gets handled through there. So, anyway, that's been some of the conversation on that as far as how I'm going to take care of it as a full time driver.
Right.
And then beyond that, like it was a 66 unit complex. It was about a $2 million raise, and I did the capital raising through the platforms of talking to people on the Wealthy Trucker podcast or going on other people's podcasts. Once again, back to just talking about it all the time, and then met quite a few people through the meetup that we do in town. I'd go talk at the other real estate meetup in town, even though it's mostly single family people there. There's still people looking for passive investment opportunities, and they've got the mindset of investors. So, I'd go talk at their meetups and really just getting out and talking. That's that was the key element of raising capital. And then, I don't know, man, there's a lot of different things you do. I built a website, which I did myself. I sometimes I think I should have just hired somebody. It would have gone faster and looked better. But ultimately, I did build it myself, and managing a CRM. That's something that I went through a few different iterations before I kindly started figuring out, all right, this is the way I need to do it, and just trial by error.
I like it though. I mean, that's what it takes. I think that's what a lot of people, especially as they're coming in new to this space, they want to hit the home run out of the gate. They want it to be fast. They want it to be now. And this is a slow growth process. And I think that oftentimes gets overlooked and underappreciated because, we live in a society that wants it done. We want it done now. We want it done today. And this is not an overnight success business. So I think you've set the bar appropriately for what it takes: building a meetup, building a podcast, building a website, talking about your deals to everybody. That's it's a slow moving train, but once it gets started, it's hard to slow down. Tell me, was there bad advice that you have received along the way in the scaling process where you're like, yeah, that just didn't work out the way that I was told?
I think I kind of mentioned it earlier, but I think the idea that if you have a deal, the money will come, I think that's bad advice. I don't think people should lean on that and just think that that's going to inevitably happen. The reason that it kind of does happen is because if you're actively pursuing a deal and trying to make things happen, you should be out talking to people and networking to make it happen. And the more you talk about it, the more that people will want to invest with you, and inevitably you'll start finding the money. But to say that it's just going to come almost as if you don't have to put any effort into it, that's bad advice.
Was there good advice that someone gave you along the way that was a pivotal, hey, this is something you should think about? Or was there a mentor that gave you something that said, hey man, here's a good piece of advice that comes to top of mind?
It's all about your mindset. I mean, the knowledge required to run a syndication or buy a property it's not a heck of a lot more than what you need to just buy a single family house. I mean, there is more, I'm not going to lie, but it's not overly accessible that anybody couldn't just go out and get the education. Like I said, I got most of my education listening to podcasts and reading audiobooks. I didn't get it all there. We did end up hiring a mentor that helped us really refine the underwriting process, which is pretty important if you're going to be able to give somebody a prospectus on what kind of return you're going to give them. But that was really the only thing I paid for as far as knowledge is concerned. So really, the best advice is just you got to get your mind in the right place. Look at $100,000 house and think, I can easily afford that. But you look at $1 million apartment complex and think, there's no way I could do that. Well, honestly, man, it's only one more zero.
Right.
And there's no reason you can't do a $10 million property as your first one, as long as that's what you set your mind on and you're focused on it, and you don't tell yourself you can't do it. So, yeah, our first syndication was a $2 million raise.
Mm. Yeah,
So,
and that's a strong raise out of the gate. Yeah, that's absolutely a strong raise. That's fantastic. Tell me, if you were to fast forward 5 years from now, what do you want your business and life to look like?
I want to be able to hit the road when I want to, as opposed to when the company tells me I have to. So that would be an ideal situation. I love driving. I really do. I get to see the mountains every other day because I'm on my way to Denver right now. And, I would like to be in a situation where I can go hop in a truck and do it just because I want to do it. I enjoy real estate. I really do. I love touring properties, figuring out the problems and how I can make them better. So I would imagine 5 years from now, I'll be doing a lot of that and just solving problems. I mean, then beyond that, I've got 5 kids. So 5 years from now, I want to be spending as much time as I can with my kids, even though some of them will already be out of the house. It's fine. I can still spend a lot of time with them. And then just volunteering more at church really is one of my big goals. I volunteer in the high school ministry now, and I'd like to be able to do more there than what I'm able to do right now.
Got it, man. That's great. I love that that future thinking, and not just thinking in terms of business, but also personally where you want to land with that. And I guess this is maybe the last question here I'll have for you before we sign off. But when you think about the word impact, can you define that word for me, and then tell me what type of impact do you want to have on other people?
Oh, impact. I mean, you're changing lives when you're impacting somebody. I think about that 24 unit property we bought. We impacted the lives of 24 people when we bought it, because it was a beat down, run down Class C, almost Class D property.
Wow.
And now, even though it's still in a Class C area, it's almost a B- asset at this point because of what we've done to turn it around. And not just from an aesthetics standpoint, but we got rid of a lot of bad people, and really everybody in there now is a great individual. Even though they're lower income, they're a great individual. So the impact that we had, I mean, I don't personally see it in the entire community, but I know it's happening, because we don't allow people to just come sit on the property, so we're impacting more than just the people who live there. We're impacting the community. And then beyond that, you're impacting people who are looking for passive investment opportunities. I mean, you're giving people the opportunity to finally start making mailbox money in an asset that is so proven that it's one of the safest investment vehicles in the world, real estate. So the impact is vast,
right,
in this business.
I love it.
So
I love it.
It's what I enjoy about it.
Yeah, we can clearly tell that. Eric, I certainly appreciate you taking the time to break down today what it takes to grow a syndication business, even when working full-time. For those that say it can't be done, you can clearly prove that they're wrong. You've done it from the road, mostly. You've done it, fairly rapidly and, with precision. I think that's it. And you're clearly, with your definition of the word impact, you're impacting the people and lives around you, both on the investor side and on the tenant side. So kudos to you for making it happen and doing what it takes to get it done. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Well, you can schedule a call with me if you go to my website. It's febroscapital.com. And then also, if you listen to podcasts or you're on YouTube, look up The Wealthy Trucker. And then I've got the ability to connect with people on there as well.
And that's Febros Capital, spelled Febros Capital, febroscapital.com. We'll make sure we put that also in the show notes. Eric, thank you again for coming on the show. Certainly appreciate it.
Sam, it was fun. I appreciate it.